Are you looking to add higher yielding dividend stocks to your portfolio? Today's video is going to be a review of my favorite higher yielding dividend stocks. If you're interested in that, stay tuned. Hey, welcome back everybody. Kevin Burgess back with another video, and today I want to talk about my favorite higher yielding dividend stocks. Now, there are benefits to having higher yielding dividend stocks. For retirees like me, it provides a higher level of cash flow from my dividend investments. So that's a positive for having higher yielding dividend stocks. It also, in times of higher inflation and higher interest rates, brings better value to the table because you're getting a lot more dividend payments in the short run than you're looking at growth in the long run. And therefore, from a time value of money perspective, they are worth more. But lastly, and probably more important, it's a lot of fun when you get dividends in and it's enough that you can actually buy more shares of the company. So whether you're using a DRIP program or whether you're manually reinvesting your dividends, it's a lot of fun when those dividends come in and you get to buy more shares of either that stock or any stock that you're looking at. So in my opinion, higher yielding dividend stocks are a lot of fun. You don't want to have a whole portfolio of them, but it is really kind of fun to have some. Now, I need to talk about a warning first around higher yielding dividend stocks. There are a lot of people who are chasing yield and looking for the stocks with the highest dividend yield. That is a dangerous game, and that's because when stocks have high yield dividend payouts, there's usually some reason, some business reason for that. If investors are not interested in that stock for those business reasons, the dividend yield is likely to go higher. Maybe they're about to cut their dividend. Maybe they're about to go out of business. Maybe they have a lot of lawsuits. There are a lot of business reasons that investors shy away from stocks. So it's important that we do our due diligence around these stocks. But today I want to give you a overall look at my top higher yielding dividend stocks. The criteria today is going to be that I'm excluding REITs. I'm excluding MLPs, master limited partnerships, but I'm including business development companies. In addition to that, I'm looking for yield greater than or equal to 4.5%, stocks that have been paying an increased dividend for at least 5 years, and that have a Simply Safe Dividend safety score of at least 60, so 60 or better. And that produces a list of stocks that's probably about 15 in total. And I have narrowed that down to 9. And as always, I want to look at my 5-factor due diligence model. And that is that first and foremost, we want to look at the business fundamentals. If the business fundamentals are there, then we can move on to their capital allocation process. If we like that, then we look at the valuation and we look at how much the company's worth. Then the fourth and fifth thing relate to strategy. We like to see a strategy that we understand and that we believe will bring value in the future. And then fifthly, a management team who has proven that they can carry out the strategy that they've laid out. So with those 5 things in mind, let's take a look at my top 9 dividend yielding stocks. The 9 stocks that I'm pulling together here are pretty well diversified. These 9 stocks represent 6 different sectors of the economy. So there's some pretty good diversification in this list of stocks. I've got 2 from consumer discretionary, 1 from information technology, 1 from the utility sector, 2 from the financial sector, 1 from consumer staples, and 2 from communications. So without further ado, let's get started. First is Whirlpool. As you can see, the dividend yield at Whirlpool is 4.51%. They are part of the consumer discretionary sector. Obviously, everybody knows what Whirlpool is. They have household appliances. They have a dividend safety rating of 70, and their last dividend was a 25% dividend growth. They are coming across hard times, though, with the economy slowing down, with housing sales slowing down. So there's a lot going on there behind the scenes from an economic perspective. But the company itself is solid. So I own Whirlpool shares right now. So it's one of my top favorite higher yielding stocks. The second one on the list, and it's a little bit out of order, but I wanted to put the consumer discretionary together. Leggett & Platt is again a solid company dealing with the same issues that Whirlpool is dealing with. They also have a dividend safety rating of 70, but they are yielding 5.03%. Their last dividend increase was 4.8%. So I consider Whirlpool and Leggett & Platt pretty much identical in terms of where they sit in my portfolio. So you could pick either Whirlpool or Leggett & Platt, but if you want additional diversification, I would split the amount that I want to put in that sector and buy half of that into Whirlpool, half of that into Leggett & Platt, and kind of see where that goes. The third stock on my list is IBM, International Business Machines. IBM's had a tough way to go. They had a strategy that their management team was not able to carry out. A couple of 3 years ago, they installed a new CEO who revised their strategy and focused on this hybrid cloud strategy, which I think makes a lot of sense for IBM. So IBM is currently yielding 4.55% with a dividend safety score of 65. They've got some pretty slow dividend growth, and I would expect that to continue in the future. But again, it's a pretty nice dividend yield. My fourth favorite higher yielding stock is Pinnacle West Capital. Pinnacle West is a utility. It's out of the Arizona area, mainly in the Phoenix area. Their dividend yield currently is 4.57%. They have a dividend safety score of 70. And again, low dividend growth, and we will probably see that continue over the next few years. But I believe that not only is it a good yield today, I think there's the potential in the longer term for this particular utility to grow. So I am buying it for its yield, and I'm holding it for its long-term potential value. The fifth stock on my list is Prudential Financial. Prudential is currently yielding 4.82% with a dividend safety score of 75. Now, Prudential is a financial, but it's in the life and health insurance arena. They've had relatively slow dividend growth, which is going to be a pretty common theme among higher yielding dividend stocks. Once they begin to have such a large dividend, it is really difficult to grow that at a fast pace. So, if you're buying higher yielding dividend stocks, get ready for and get used to a slower dividend growth rate. Now, my sixth favorite higher yielding dividend stock is Philip Morris. Now, Philip Morris is in the consumer staples area, in the area of tobacco. And so I know that there's some people who consider this a sin stock and don't want to invest in it because of their own ethical beliefs and things like that. And I get that. I certainly understand that. And I respect that. For my portfolio, I don't have an issue investing in Philip Morris. They have a dividend yield of 5% with a dividend safety score of 64. And again, a relatively slow dividend growth rate of 1.6% this past year. But I see Philip Morris as the alter ego of Altria, which is the old Philip Morris. Altria Group is focused in the United States, whereas Philip Morris is focused in the rest of the world outside of the United States. I think Philip Morris has a better longer-term potential than Altria. I actually own both of them, Altria as well as Philip Morris. But when I think of my favorite higher yielding dividend stocks, Philip Morris hits that list. Now, my seventh favorite higher yielding dividend stock is AT&T. Now, AT&T doesn't quite fit the criteria because while they yield a 5.74% dividend yield and have a dividend safety score of 70, their dividend growth has actually gone down. They cut their dividend last year. And so typically I look for companies that have grown their dividend for the last 5 years, but I think this reset for AT&T puts them in the position where they can continue to grow this dividend over time. Again, I expect the growth to be relatively slow, but it's a higher yielding dividend stock that has a pretty decent safety score, and it also fits hand in glove with the number 8 higher yielding dividend stock, and that is Verizon. Now, Verizon is currently yielding 6.33% with a dividend safety score of 87. Their dividend growth rate is about 2%. Again, very slow, something that we should expect at least for the next several years for both AT&T and Verizon. Now, AT&T and Verizon, I consider them similar stocks. I just think it's a good practice to have both of those behemoths in the portfolio. So I'm going to continue to hold both AT&T, and then once I get back into Verizon, I will hold both of those stocks for higher yielding dividend results. And then finally, I'm going to share with you my 9th favorite higher yielding stock, and that is Main Street Capital. Now, Main Street Capital is paying a dividend yield of 7.11% with a dividend safety score of 62. Their dividend growth, again, is relatively slow at 2.3%. They are in the financial sector, but much different than Prudential. Prudential is in the insurance business, whereas Main Street Capital is a business development company that helps businesses develop and grow. So they are in the business not only of lending money, but also partnering with higher growth companies in exchange for future equity in those companies to help them grow and be a bigger part of the economy. So that's my top 9 higher yielding dividend stocks. I excluded REITs and master limited partnerships from this analysis. If you're interested in REITs and you want to see more about that, leave me some comments below. I would be happy to kind of walk through some of the REITs and which ones are my favorite there from a yield perspective. So if you're interested in that, leave me some comments below. And as you know, I'm not a financial advisor. I'm just sharing with you some of my viewpoints on these 9 stocks that I've laid out for you. I actually have made videos on several of these. So if you're interested in more of a deep dive on these, in my library are some videos on some of these stocks where I go in depth in these stocks. So that kind of wraps it up for today, guys. I look forward to seeing you on the next video.